Right. Very good morning to all of you here. Online students. Have a good day. How are you? Online students. Hello. Are you all there? Are you all there? Right. So extremely sorry for the delay. Anyway, we'll start our discussion now. Last week was our first day. Week before the last week was our first day, and we have started and completed the discussing about the introduction to business finance, right? The introduction to business finance part we have successfully completed, and we learned many things in there. What is finance and how to differentiate from accounting? Then what is financial management, right? Then we discuss uh, what are the some areas related with finance. Then we discuss one of the main important part in there, that is your financial decisions, right? So simply you have to take as a finance manager, basically you are taking many decisions, but all such decisions can be comes under four main areas. That is your investment decision, financing decisions, dividend decision, as well as working capital management decision. So investment decision is simply as a finance manager, you need to think about what are your profitable investment opportunities, right? So what profitable investment opportunities are available in the market, right? So then you need to do certain process with regard to the investments. Then you have to pick the profitable or appropriate investment opportunity for you to invest. So then it comes to the finance decision, then you need to decide about your capital structure. How do you get the funds for your investments, right? You can go for equity or debt capital, and we discuss what are the pros and cons of issuing these debt and equity capital. It's because it's based on the risk, right? It's based on the risk. Then we discuss about dividend decision. It's simply how you distribute your earnings to your shareholders. Then finally, we discuss about working capital management. So that is how we ended up with discussing the finance decisions part. Then we started discussing about agency theory. You understood what is agency problem, agency relationship, conflict of interest, information asymmetry, then the agency problem, and what are the mechanisms that we have to come across to mitigate this agency problem, because we know that we cannot make it zero because the ownership is separated from the company's control. Anyway, the owners are different from the control of the company. So then I have asked you to check about this stakeholder theory on the spot. Right. Okay. So that's the summary with regard to our previous lesson. Now, today we are going to start the financial markets part. Right. Today we are going to start the financial markets part. Right. So let us see. Online students, are you all there? Can you all hear me? Yes, can you all hear me?
Hi, sir. Good morning. We can hear you.
Okay. Good morning. Good morning. Right. Okay. So these are the things we are going to discuss. Actually, the lesson outcome, lesson outline. So we are going to discuss about the financial system of Sri Lanka in a very brief way. Then current trends in global financial markets. I will upload a PDF with regard to that. And the other one is financial and capital markets. Right. So these are the learning outcomes, which means once we complete this particular lesson, you should be able to perform these things. So what are things you are in a position to relate the functioning of the financial market to the financial management function of the firm. So how you are going to relate? So finance manager is there, financial markets are there. So you are going to relate these two. Then you are going to recognize the current trends in global financial environment. Then the third one is assess opportunities and risk in money markets. And finally, demonstrate the functions in capital markets and its operating mechanism. So these are the learning outcomes that you are going to get once we complete this particular lesson. Right? Okay. Now, to start with, first and foremost, we need to have a proper understanding about what financial market is. Right? We need to have a proper understanding about what financial market is. Accordingly, we will start our discussion. Could you please excuse me for 10 minutes because we are having an examination there at 9 o'clock. So I have to be there to start the examination. So I will give a brief introduction about the examination and come back within 10 minutes time. Right? So once we come, we can start our discussion. So until such time, just search what is financial system. Right? You can Google it, just search what is financial system. So I'll be back within 10 minutes. Yes, online students, don't go anywhere. I'll be back within 10 minutes. Huh? Right. Okay. Right. Okay. So we'll start the remaining part of the lecture. So we'll see now. You got to know that yes, of course. I think online students. I think you all are there, right? Online students. Hello, online students. Are you all there?
Yes, sir.
Fine. 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 Okay. So we'll start. Now, we are going to learn about financial markets, right? We are going to learn about financial markets, but before that, you need to have a better understanding about what financial system means, right? Any idea about what financial system? Is any idea with regards to what financial system is? First one, network of financial institutions. Okay, good. Yes. What is it? Yes. What is it? Financial market. You're talking about the financial system. Okay, right. Banks, financial institutions, right. So now you know that, so you all are experts in economics, isn't it? So you learn principles of economics and business economics. So you are very familiar with these concepts. Now, if I ask a small question from you all, so what are the, if you look at an economy, who are the main players in this economy? Who are the major parties of this economy? Sorry? Households. Yeah. First one is, you could say it's households. Yes, online students, I think you can see what I am writing here. It is to do with the laptop now. We can easily, can you all see this properly?
Yeah, it's fine, sir. Yeah, it's manageable.
Right. Okay, so we have households. Right. Then at second, we have, yes, we have firms. Right, good. We have firms, we have business firms. Third, we have households, then firms, then government. Then we have government. Thereafter to the household, firms, government. Very good. So we have foreign sector, right? We have foreign sector. So now this is economy. These are the major players. We have households, consumers are there, business firms are there, government, and the foreign sector. Now, what they do actually? What they do? So if we let's consider about households. Now we are representing households, right? So let's say you go to the market and you demand goods and services. It is what? Is it a decision or something else? Huh? Is it a decision? You believe that you have to purchase this, right? Business says things that they need to expand. Right? Government says they have to reduce the tax. Foreign sector, they consider about eliminating the import restrictions. So those are what? Those are simply decisions. Right? So what these people do is simply they make right? They make decisions, right? They make decision. Each and every party, they make decision. You believe that better to purchase a car, better to construct a house, better to go and eat something. So those are your decisions, right? Better to come to that campus, better to BSAA applied accounting degree. So those are your decisions, right? Companies, they believe that better to expand, better to diversify more, better to come up with new product, right? Better to provide discounts. All are their decisions. Government also, right? Better to reduce the tax, right? Better to provide free education. Those are their decisions. Foreign sector also, yes, better to eliminate the import restrictions and other areas for the international trade and having a proper exchange rate system. Right? So those are some of the decisions that they are going to make. Now, right? So they make these decisions, then these decisions must be what? Implemented, right? These decisions must be implemented. You can make a decision, but if you don't make it implementation, what happens? No point, right? So you have to implement those decisions. Clear? Now, each and every party, they are going to make decisions and they are going to implement those decisions. So when these people implementing their decisions, they need the support from various variables, right? Various factors, various elements, or various components, right? For an example, let's say if a company decides to expand their business, they need what? They need capital, right? They need funds. So they can issue either debt capital or they can go with equity capital, right? They can either issue debt capital or they can go with equity capital. So shares, debentures, bonds, they can issue. So commonly we call this as what? Shares, bonds, commercial papers. Very good. So we commonly call it as financial instruments, right? We call it as commonly financial instruments. So they need the support from this, right? They need the support from this. And to generate capital, they have to consider about a particular place. That is what? Financial markets. Right? Financial markets could be money market, could be capital market. They need to get the support from there, right? And also, let's say households. You decided to. I'm just elaborating these things in a very simple way, right? So you decided to construct a house, right? So you can, some says that we can do it by our own money, but you need what? At least you need to obtain a loan, right? So then you need to get the support from whom? Financial institutions, right? You need to get the support from financial institutions, right? Otherwise you cannot, right? Otherwise you cannot. And also when the government making several decisions regarding tax and everything, and they need to uh, do it with the support from different regulatory bodies, could be income revenue, something like that. They need to get the contribution from those parties as well, right? Then what else? What else? So you have regulatory bodies. So these are the things that you have said, right? Your regulatory bodies are there, financial instruments are there, financial markets are there, financial institutions are there. Then, so now we are doing a lot of what? Online transactions, right? Paperless, scriptless, right? Scriptless security settlement systems are there, right? So which means we are using what? Financial infrastructure. Financial infrastructures to do our businesses, to do make our decisions as well as to implement ATM, RTGSS, right? Lanka Secure, CDS, scriptless security settlement systems, many things. So we call it as what? Financial infrastructure. You need this platform. Simply, you need to make a transfer. Are you going to go for the bank nowadays? You are going to the bank to do the transfer, let's say 50,000. So what you could do, you could do an online transaction. So it's something like financial infrastructure, ATM, online banking, all the coming under that platform. Clear? Then, so all these are being governed by whom? Central Bank of Sri Lanka, right? Central Bank of Sri Lanka. These are the major players in the economy. What they usually do, they make decisions. Otherwise, we cannot have a smooth functioning in the economy. Smooth functioning or rough functioning. So they have to make decisions and they have to implement those decisions. So when they are implementing those decisions, they need to get the support from different elements, right? So commonly we call this as financial what? System. We commonly call this as financial system. Okay, so now in this financial system, our topic is financial markets. This is our topic today. Right, so you need to have a good idea about what we are going to discuss. It comes from financial system, right? So we are discussing today financial markets, and it is the one component of financial system. Accordingly, you need to have a simple idea about what financial system is. Right, so here you could see it says the financial system is the system that runs to facilitate the conduct of numerous transactions in money in an economy. So this is a system. System means what? You have input, you have process, you have the output. So this is the system which helps, which facilitates others to make their decisions and to execute their decisions easily in an economy. So that is what here it says. The financial system is a system that runs to facilitate the conduct of numerous transactions in money in a country, economy. Okay, right. So because of this system, what will happen? So here it says this system produces or creates money and transaction, right? Produces or creates money and transaction. Right. Okay, so now let's see. Now for an example, let's assume that you are running a company and you need to expand your business, right? You need to expand your business either to come up with a new product or open up a new factory, or anyway, it's a expansion, right? Anyway, it's an expansion. Now, for you to do your investment, expansion means an investment, right? So you need what? Finance. You can issue equity capital or debt capital, right? Anyway, you need to get the support from this financial markets, right? For example, let's say you are going to get a debt capital and you go for a bank loan, right? You go for a bank loan, which means simply, right? So you are getting the support from what? Financial institution, right? Financial institutions, and you are going to get a bank loan from there. You are going to get a bank loan from there. And once you get the bank loan, the cash flow or the cash balance of your company will be increased, right? Cash balance of the or the cash flow, or the cash balance of the company increases. Then what will happen? You are in a good position to increase your production or whatever the thing. Simply you come up with a new product or you expand your business with the purpose of expanding the production. Right. What happens? Your production will be high. For you to have a higher production, What do you need? You need labor. You need labor. Simply, employment. The market will be high. Right? Employment opportunities available in the market will be high. Now, here we are considering only one company. But if you consider these as a whole, employment will be high. Right? Then what will happen? So when you are doing your business, ultimately your profit or the income will be high. Then you can use it to provide more salaries or provide more benefits for your employers. Accordingly, their income will be high. Right? Income will be high. Once the income will be high, what will happen? You save more, right? You save more. It could be other way around, but theoretically it's what happens, right? You save more. More savings means what? You are not doing, but bank does. Investment. They invest your money, right? They invest your money. Accordingly, investments will be high, right? Investments will be here. So it's like a cycle, right? Again, when the investment is high, they are in a good position to companies are financial institutions are in a good position again to provide bank loans because they have good funds with them. You save, those savings are their deposits. Those deposits can be again lent. Clear? So it's a cycle, right? It's a cycle. So that is what here it says, right? So you could see it says the system produces or creates money and transactions to facilitate economic activities, which generates, right? Which generates employment, production, trade, income, savings, as well as investments. Clear? So it's like a cycle. It's like a cycle. Right? It's like a cycle. Financial institutions are there, right? They are providing bank loans to the company, for example. Accordingly, the company's cash balance will be high. They can use that to increase their production. To increase the production, they need laborers. By doing so, their income will be higher. If those employees are getting high salaries, higher home salaries, right? Then their income will be high. Then they can save more. Those savings will be invested. Would be invested. Right? It's a cycle. That is what we want to do. It's a cycle. That is why I think when you were discussing about principles of economics subject, you learn something. Your production equals to what? Production equals to right. Your production equals to income. Income equals to expenditure. Right? It's very simple. Now, simply let's say this is a chair. This is your product. This is your product. So let's assume that don't consider about the profits. For you to make this chair, you have paid 1,000 rupees as labor cost. 1,000 rupees as labor cost. Accordingly, what is the price of this product? 1,000. Right? The price of this product is 1,000. And let's say you have produced this product and we have to pay 1,000 to you. So our product output equals to income. And this product, I'm the seller, I'm in the market, and they are selling this product. You come and you purchase this product. How much you are going to pay? 1,000. Output equals to income. Income equals to expenditure. But due to certain leakages and withdrawals, it's not happening. Savings, taxes, things are there. So it's a cycle. Right, clear? All of you? Yes, online students, are you all okay with this? Yes, online students, are you all okay with this? Are you there?
Yes, sir.
Right, okay. So now let us discuss about these financial markets, right? So that this is our topic. But before coming to this topic, I felt like it would be better to have some understanding about financial system. Right. So let's see. Introduction to financial markets. Is that okay if I erase this? Right. So don't look at there, right? Don't look at there. Right. Okay. So now you got to know that when we were discussing about the introduction to financial management part in this economy, normally we are saying there are two types of units. Right? There are two types of units. Who are they? Who are they? Two types of units are there. Two types of units are there. Who are they? Yes. Just go through your lecture notes. And under financial institutions, I think you have that chart. Yes. Who are the units? Huh? Surplus units, and we have surplus units. Then, on the other hand, we have deficit units. Right? Surplus units are there. On the other hand, we have deficit units. Right? People who have more money, people who have less money. Right? People who have less money. Right? So what happens is, let's say these people are having shares. To make this very simple, right? So they have purchased shares and now they are left with money. What they have to do? In a very simple way, what they have to do? They have shares. Now they are lacking with money. What they have to do with regard to shares? They have to sell the shares, right? They have to sell the shares. To whom? To whom? So in the economy, we have surplus units. So they are having more money. What they do? They are ready to buy the share. Right? They are ready to buy the share. Right? So simply, there's a particular place which provide this platform to the individuals or to the society. That particular platform, we call it as financial markets. Right? Financial markets. So in the economy, we have surplus units and deficit units. What they are doing is they can exchange their funds among themselves. Right? They can exchange their funds among themselves. How? This is a particular example, either buying shares or selling the shares. If you have shares, but now you don't have money, what you can do, there's a particular place for you to satisfy your need. That is financial market. You come to the financial market, then you sell your shares, and in the financial markets, we have surplus units. Since they have more money, they buy your shares. Right? Accordingly, they are getting shares. You are getting what? Money. Right? They are getting shares and you are getting money. So there is a particular platform available for us to exchange funds among investors. So that particular place, in a very simply, we call it as what? Financial markets. Right? Financial markets. Understood? So here you could say, it says at the very beginning, financial markets are, right? Financial markets are the modes of arrangement to trade savings or funds among investors. So here you could see you are doing it. So I have simply taken an example to make it clear. Shares. Simply by selling and purchasing shares, you are exchanging money from one party to another. Money or funds from one party to another. Right. More specifically, a system comprises of individuals and institutions, instruments, and procedures that bring together both borrowers and investors. Now, even though we simply discuss, they can sell the shares and here these are the people who buy the shares, there must be procedures, right? These people either could be individuals like us or could be institutional investors or companies, right? Any party could be there, right? So there's a proper platform for us to do these things. Even you can go for a Colombo Stock Exchange, debt security market is there. You can purchase treasury bills or sell treasury bonds, right? So that is the platform or the procedures. Certain procedures are there for you to buy and for you to sell, right? For you to buy as well as for you to sell. Simply the procedures. I believe that you know the meaning of these procedures, right? A particular methodology, right? A particular method. Right. So now these financial markets, Mutha, we can divide it into two. What are those? Yes, what are those? Yeah, so first we are having something called money market, and the other one is capital market. So we have money market. On the other hand, we have capital market. Right. So for an example, let's say now you know investments, right? Investments is not only share investments. Right. For an example, let's say if you have deposited for 3 months savings, is it a short term or a long term? Short term. Clear? Right. And you have made a deposit, some fund bank for 1 year, short term or long term? Okay, short term. So all these short term investments are coming under what? Money market. Right. All these short term investments are coming under money market. There are certain securities that are available for you to purchase. And so simply your objective is to get the money within 1 year period, right? Your objective is to get the money within 1 year period, and therefore you are doing the investment, and that is what we know as money market. Treasury bills, commercial papers, interbank all money market, all are coming under this category. Then, right now, you are purchasing shares, but we know that some investors are there, they have come to the share market and put their money in the morning and take the money back. Right? But when it's come to the share market, for an example, let's say you are going to invest in shares, right? You are doing a significant analysis about the company, economic analysis, fundamental analysis, technical analysis, everything. You are a good investor and you are going to do an investment in the stock market for 2 years, right? You are going to purchase more shares and you are going to wait. It's coming under, is it a long-term investment or a short-term investment? Huh? 2 years. Long term, but usually they say less than 1 year, it's short term. In between 1 to 3 years, it's medium term. More than 3 years, it's long term. But anyway, it's coming under the long term part. So if you are doing an investment with the long term purposes, it's coming under the capital market activity. Right. So treasury bonds are there. It's starting from 2 years, right? 2 years, 5 years, 10 to 30 years. Right? Shares, corporate debt, right? Debt security market, all are coming under that. Are you okay with this? Right. Now, what do you think about the person who wishes to invest in the money market as well as the person who wishes to invest in the capital market? What do you think about the perception about such kind of a people?
Yes. So
Yes, because you are going to get the return immediately. And very good. Huh? And also, these people are more towards on getting quick returns, right? Getting quick returns. They cannot wait, right? So that's why they are doing investment in 3 months treasury bills or 3 months deposits, 9 months or something like that. So they need immediate returns. Little bit away from the patient. But if you look at capital market investors, what do you think? They are taking high risk and they have the high patient levels. Why? Because they have invested big money by purchasing big financial and more financial instruments, and they are willing to wait some time to get the return. Right? They are willing to wait some time to get the return. If you have done a long-term investment, right? So your patient level is little bit high. For an example, forget about share market, right? You purchase a particular land from somewhere else, right? And you believe that in near future, within 4 hours, there will be a highway going on that particular area. Accordingly, you purchase that land at now at a lowest cost, right? And definitely you know that because of these projections during next 4 years, definitely you are getting higher amount. Why? Your land will be taken over by this particular highway. Accordingly, you are getting a higher amount. Clear? So simply you can wait, right? You can wait for a big return in the future. Your patient level is high. So those are some of the behaviors of the people who are invested in capital market. Clear? Capital market. Good. So money markets are there. It's for short-term investments. Capital markets are there. It's for long-term investment. And we just discussed about the behavior, but there are many. It's very simple way. Clear? Right. Now, simply we know that in the financial markets, we are trading many things, right? So what are the things that we are trading? We are trading shares, right? We are trading debentures, right? And many things, many more. So commonly put up, we call these as securities, right? Commonly we call these as securities, right? Securities, right? Since those securities are being traded, these financial markets are also known as what? Security market. Right? So these financial markets are also known as security market. And all these transactions, all these are agreements, right? All these are agreements, right? So if you purchase a table, it's an agreement. If you purchase a treasury bond, it's an agreement. If you purchase a share, it's an agreement, right? Okay, so if I put it in a summary way, financial markets are the place where the investors can trade financial instruments and transfer funds among themselves. It provides the platform, right? It provides the platform, right? So this is the example that we have taken in the economy. We understood that there are deficit as well as surplus units. And since they don't have money, they are going to sell the shares, and they are the people who are willing to buy the share accordingly. Fund is being transferred from surplus to deficit units. So that this financial market simply provides the platform for that. And when it comes to these financial markets, we can divide into money markets and capital markets. So money market is for short-term investments. Capital market is for what? Long-term investments. And the instruments that are being traded in the financial markets are also known as securities. Therefore, we call this as security market. Okay, we call this as security market. So here you can see the financial markets can be divided into money market and capital market, right? Money market and capital market. The products traded in the financial markets are different types of funds, right? That have shares, debentures, unit trust, many things, different financial instruments are there. So investors are the deficit and the surplus units who buy and sell these funds at prices. So this is what I have mentioned. Right? Surplus investors are there, people who have more money, and deficit investors are there. So they are trading the financial instruments among themselves for different prices, from different prices. In general, these funds are known as what? Securities, right? These funds are known as securities. Therefore, financial markets are also known as security markets. And all these are contracts, right? All these are whatever the financial instrument, it's a contract, right? It's a contract between the issuing institution as well as the other party, right? Other party. Right, so could you please read this? Please, online students, are you okay with this? Online students? Please, online students, are you all okay with this?
Yes, sir.
Yes, sir, it's fine.
Right. Right, okay, fine. Okay. So again, this is a theoretical topic, huh? We can start. It's a theoretical calculators, huh? Theoretical calculators. Right, okay, so now these are the functions of a financial market, right? Functions of a financial market. What are the functions? Borrowing and lending, right? So if you consider about treasury bill market, what government does, they borrow money, and if you purchase treasury bill, they give you lend money to the government, right? So if you lend money to the government, so borrowing and lending happens, and price determination. Right. For example, if you consider about shares based on the demand and supply, the share price will be what? Bigger. And based on the bidding system in the treasury bill market yields are being determined simply based on the demand and supply. And information aggregation and coordination. So there are a lot of information are being distributed among investors about a particular product and also certain procedures, information aggregation and coordination. And the other one is what? Risk sharing. So one is one of the, what could be the example for this? For example, who shares risk? Any companies related with any companies who handle this risk sharing in any country? Insurance company? Simply what you do, you transfer your risk. If your risk is 100%, Are they included in the 100 amount? So that's a particular amount that they are going to assure. Right? So risk sharing is there. And liquidity as well as the efficiency. So liquidity maintaining, this is the major task of the money market. Right? Liquidity. Right? Liquidity means what? Liquidity means what? We need to answer it next. And we do the answer in next. Liquidity means simply how quickly and easily you can convert the things into cash by minimizing economic losses. Right? How quickly and freely. For an example, let's say, forget about shares. So you have two vehicles. One is a Volkswagen and another one is a Volkswagen, or the old one, the first one, with the Toyota vehicle. Which vehicle is having the more liquidity? Which vehicle you can sell easily? Right? See, because you know that I is a vehicle from 2000 to 2024, people are ready to take Toyota vehicles because of the confidence that they have on Toyota vehicle. Accordingly, you can easily sell your Toyota vehicle. But if you have a modern Volkswagen vehicle also, it takes some time for you to sell your vehicle. Accordingly, that is what we know as liquid, right? So simply what you said it, yes, correct. The ability of that how it is for you to convert the things into cash. Right? So that is what we know as liquidity and efficiency. How easily you can do the transaction. Right? So if foreign investor comes to Sri Lanka, how we can easily we can do his investment. How you can do your investment. How many days will it take to open the stock market account? Right? So simply those are coming under this efficiency model. Right? Efficiency. How freely and quickly you can do the transaction. Simply, what about the waiting time? Is it lower or high? So these are the major functions that are coming under financial markets. The money market or would be capital market. Okay. Then now this is how we can categorize the financial markets. Right. For you, only these three things are needed. Forget about these two. Only the first three. Right. Now categorization of financial market. Now actually we have categorized without having any criteria. Actually, we had a criteria, long term or a short term, but we just, without describing these two, we just categorize money markets and capital markets. Right now, what is the base that we have for us to classify the financial markets like this? Right now, here we have three criteria to categorize financial markets. The first one is what? Term to maturity. What do you mean by term to maturity? How many days or years will it take to expire the financial instrument? Right? How many days and time or years will it take to expire the financial instrument? For an example, if you have done a deposit for 1 year, what is the term to maturity? 1 year. Term to maturity means how many days will it require to expire the product? If you have done a 2-year FD, maturity period is 2 years. 3 months treasury bills, maturity period is 3 months, 91 days. So that is term to maturity. Accordingly, we can categorize financial markets as money and capital market. Right? Money market and capital market. Less than 1 year, it's money market. More than 1 year or more than 3 years, we could consider it as capital market. Clear? Money market and capital market. Then the other one is generation of the financial instruments, from where the particular financial instruments originate. Right, so we'll discuss this part later. So you have two parts, primary market and secondary market. So we'll discuss these two things later, not now. Just to know that based on the generation, we can categorize it into one is primary market and the other one is secondary market. And the third one is nature of the financial instruments. Right? If you have debentures, if you have issued debentures, it's coming under which capital? it's coming under debt capital. If we have issued shares, it's coming under equity capital, right? It's coming under equity capital. So that is what here it says. Nature of the financial instrument based on its characteristics, based on its nature, we can say this is coming under the debt capital or debt security, or this is coming under the equity capital or equity security. Thank you. Right, it's coming under debt capital or equity capital, debt to equity capital. So we have for debt, we have debt market, and for equity, we have equity market. That's the stock exchange. Okay, so these are the three things that you have to know how we are going to categorize the financial markets. The first one is based on term to maturity. The second one is generation of financial instruments. The third one is nature of the financial instruments. So would you please read these two slides, please? Get an idea? Right, okay. Right, online students, are you all okay up to now? Are you all okay up to now?
Yes, sir.
Fine. Right, so these are the financial markets instruments. There are many more, but here I have mentioned few. So you know what are deposits, loans. We'll discuss what are treasury bills and treasury bonds, commercial papers, debentures, unit trust. We'll discuss all these things. So these are the things you know up to now, as I believe, leasing and hire purchase shares. What do you mean by convertible financial instruments? convertible financial instruments?
If capital can be transferred to equity.
Is that very capital very good? If capital can be transferred into equity capital, right? So at the time of issuing debentures, right? The company and the debenture holder can come up with an agreement, right? So it is simply a convertible debenture, which means at the time of the maturity, the debenture holder is being given an option either to get the cash or the capital that he has invested, or to convert his debenture holding into equity holding. So that option we call it as convertible debentures and coming under convertible financial instrument, right? So you can convert your debt into equity capital. Convertible option is there, right? Convertible option is there. Don't worry, I think the calculation will discuss those things later. Convertible financial instruments, right? So these are some of the financial instruments that we have now. What do you mean by Sri Lanka development bonds? Sri Lanka development bonds. What is treasury bonds? What are treasury bonds? Yes. Now you issue treasury bonds in LKR or some another one. LKR. Okay. So if the government needs money in terms of rupees, they issue treasury bonds or T-bill. If the government needs money in terms of foreign currency, they issue Sri Lanka development bonds or sovereign bonds. We have to pay the interest on time. Pay the interest on time. Otherwise, very more. Right. So Sri Lanka development bonds. The government needs money in terms of foreign currency. They are issuing this. Okay. They are issuing this. Okay. Right. So you know what financial markets are and its functions and how you can categorize the financial markets and some of the instruments that are being traded in the financial markets. Right. So there's a question. What is the question? Why financial markets are important to a finance manager and for financial management? Still, we cannot provide the answer for this. Once we discuss many more things, you may have the ability of answering this question. So we'll come to this point in the meantime. Right. So now we are going to discuss about financial markets. Right. We are going to discuss about financial markets, and these are some of the markets that we are going to discuss. But before that, let's look at what are money markets. Because now you know financial markets. Now we need to look at what is money market separately, what is capital market separately. Right. So introduction to money market. So here it says money market, which means we are going to say currency. Are we going to say currency? This money we say it's money market. Then why we say it's money market? So we could say vegetable market since it is sold vegetable. We can say fruit market since those markets are selling fruits. We can say whatever. Right? But here it's money market and we are not selling money. Of course, there is there also. Yeah, liquid, okay. So yeah, but so here simply in this market, what happens is we are trading the financial instruments which are having more liquid, right? Which are having more liquidity, which means you can easily sell and convert into cash. Right? Accordingly, it is much more similar to cash equivalents. Right? Accordingly, we are saying it as money market. Right? So we are not selling currency here, we are not selling money here, but the things or the financial instruments that we are trading in this market are having high liquidity, like money, cash flow, cash equivalents. That is why we call it as Money market. Right, so here it says that the money market is actually a misnomer. Right, so money currency is not traded in the money markets. Because the securities that do trade, they are short and highly liquid, however, they are close to being money. So that is why we call this as money market. Right, the instruments that are being traded in the money market are highly liquid, like money. Highly liquid, like money. That is why we call it as money market. The money market is better known as a place for large institutions and government to manage their short-term cash needs or funding requirements. More than people are working. For the immediate purpose, we can invest in the repo markets. Right? And we can get immediate returns. Right? So if you have a large amount with you, if you invest, you get additionally 1 rupee worth of return. For example, let's say you have 1 million worth of cash and you are keeping that cash in this particular cash box. And after 1 week, you can come and open the 1 million is there as it is. But if you do an investment for 1 week, it will generate a single additional coin as well. So that's the beauty of this money market. And these are the participants of money markets. So we have central bank, other banks, finance companies. How many central banks are there in Sri Lanka? Right. So how many banks are there in Sri Lanka? How many banks are there in Sri Lanka? Which banks? Licensed commercial banks or specialized banks? So both. Both. Licensed commercial banks we are having 24. Specialized banks? 6 only. Nearly 6, huh? 6 only. Right, okay. So, okay, central bank, we have one central bank and we have nearly 30 banks and finance companies. Finance companies. How many finance companies are there in Sri Lanka? Around 40 to 38 to 40, yeah. Due to quarterly, due to not submitting the quarterly report, sometimes it may change. Right, nearly 38 to 40. Right, so businesses, we know businesses, companies, and individuals. Right, so these are the participants of money markets. Right. Okay, so now let us look at what are the sub-markets coming under money markets. Right. So what are the sub-markets that are coming under money market according to your idea, knowledge? Yes, now you know what are financial markets. You know something about money market and capital market. Now we are going to look into this particular segment in a more detailed way. Right, shall I list this? Right, so what are the sub-markets coming under money market? Yes. Sub-markets coming under money market. So first one, we have this inter bank whole money market. Thank you very much. Oh, very good. I'm really happy. Right. Yes, some nice ones. I think you can see this, what I have written there, right? interbank cold money market, right? Interbank cold money market. So what happens there? Interbank cold money market. What happens there? What happens there? Transaction between banks. Very simple, no? Very simple. So let's say here you have bank ABC, right? Here you have bank ABC, and you need to, right, face an immediate liquidity requirement, immediate liquidity requirement, but you don't have sufficient amount. So what you can do, you can ask some amount from another bank, right? PQR bank. You can make a request and you can ask this amount. Let's say you need 2 billion, right? You need 2 billion, and you can ask this 2 billion from PQR bank, right? PQR bank in a very simple way, right? So you made a request, and let's say they provide you with this 2 billion, right? So usually these transactions are happen within a day. That's why we call this as an overnight market. Overnight transaction, one day, everything happens within one day. Right. So once PQR banks provide you 2 billion, what you have to do? You can use that 2 billion. Thereafter, you have to pay back, no? You have to pay back capital plus interest. Capital plus interest. Very simple, right? Very simple. Capital is okay, it's 2 billion. What about the interest? How much you are going to pay? Yes? Huh? How we are going to pay the interest? I mean, what is the interest amount that you are going to pay? Yes? Now, it's an issue, right? It's an issue. Oh, that central bank has provided something called standing rate corridor, right? Standing rate corridor. So we call it as SRC or interest rate corridor, right? Interest rate corridor. So here we have our upper limit, and here we have our lower limit. Usually the repo rate or repurchase rate will be the lower limit, and reverse repurchase rate will be the higher limit, right? Just the repo rate or repurchase rate or reverse repurchase rate will be the higher rate, right? So as you correctly mentioned, it's based on the certain calculation weighted average amount you have to pick based on the transactions happen. You have to weight it, right? So this interest rate could be varied in between these two. Let's say the upper limit could be 15% and the lower limit could be 10%. Right? Lower limit could be 10%. So in between, including 15 and 10, this PQR bank charge the interest from ABC bank. Okay. That's good. Right. So this is the rate. This is the particular is right. Standing rate corridor, which is introduced by the central bank with the purpose of minimizing the fluctuations of the interest rates, right? So why they have introduced this kind of a corridor, standing rate corridor, with the purpose of minimizing the fluctuations of the interest rates in the market. Why? If this changes, this will impact to the interest rates of other markets, treasury bill market and other markets. And then it will impact to the lending rates of the banking sector. Right? Then this will impact to the lending rates of the banking sector. So therefore, it has been monitored and controlled by the central bank. You have upper limit, reverse repurchase rate will be the upper limit, and you have the repurchase rate or the repo rate will be the lower limit. So including these two, or within these two, any rate will be charged. This again must be calculated. Clear? Understood? Now, for an example, you're asking certain amount from the PQR bank, they don't have. What you have to do? Yes, you're asking 2 billion from PQR bank, they don't have this 2 billion. What you have to do? You can ask it from another bank. It's simple. You can ask it from another commercial bank. If the entire commercial bank sector does not have this money, from where you have to go? Huh? Central finance. Central bank, right? Right. So we have to go central bank, right? We have to go to central banks, right? So not and now it's only central bank, right? Okay, it's central bank. We know that. Even though so in a personal life also, if we have issue, definitely we go to tell it to our mother. Right? If you ask this entire amount from all the other banks, if they don't have, then you are going to central bank. Right? Accordingly, central bank is known as final money lender. Final money lender. Right? So we have the entitlement to go to central bank. Why? Just because of the central bank is our final money lender, or is there any other reason? Huh? Some of our funds are with central bank. Am I correct? Right? Some of our funds are with our central bank. Why? Here it says, central bank says, based on the deposits that you have, right? Based on the deposits that you have to keep some amount with us, right? Based on the deposits that you have, you need to keep a certain amount with us. So what is that? Yes, what is that? Statutory reserve rate, right? Statutory reserve rate or statutory reserve requirement. How much is it? Huh? Percentage? Right. So central bank says based on your deposits, you need to keep a certain amount, right? You need to keep a certain amount in terms of percentage with us. Now we know that even though the entire banking system does not have this amount, we can get some benefit from central bank. Then we are going to central bank. Clear? Okay. So this is what in a very simple way what's interbank whole money market is, right? What interbank whole money market is. Right, so if you have this idea, you need to read the previous charts. Huh? Let's get this idea.
But if they have only the minimum SR in the center. Sorry. But if the commercial bank would have minimum SRR requirement with central bank, so they can't show it from central bank.
Yes. Based on certain things, they can decide. They have, that's what I told you. They have the entitlement to go to central bank. They have the entitlement, huh? Because they provided particular requirements, so they have the entitlement. If you make certain requirements, we have the entitlement request. It's, that's the word entitlement. Right. Okay, so this is in a very simple way. What is interbank whole money market? Yes, online students, are you all okay with this? Interbank whole money market? Yes, online students, are you all okay with this?
Yes, sir.
Right. Okay, are you all okay with this? Fine. So it's very easy to teach these things to you, right? Because you all are practicing this, isn't it? Practicing, right? Right. Then,
Sir.
right. So then the other one is we are going to learn, that is something called commercial paper market. Right? Commercial paper market. Right? So what do you mean by commercial paper market? Again, it's coming under the money market, short-term purposes. Right? Short-term purposes. Yes, any idea about commercial paper market? Right? So particular companies, right? Right? Particular companies, what they could do, they can issue a particular financial instrument to public, right? To public. Simply, we call it as a commercial paper, right? But the success of this issuance is being heavily dependent upon the reputation, right? The reputation of this particular company. Why? Because since you are going to purchase these treasury bills, sorry, commercial papers, you have to pay, right? And the face value, right? And the face value of these commercial papers are very high, right? Face value of these commercial papers are very high. Accordingly, for you to sacrifice your money and to invest in the commercial papers, the issuance company must need to have a high reputation. Otherwise, you don't. Okay. Accordingly, the success of this commercial paper is being determined based on the confidence that the investors are having with the company. Right? The investors are having with the company. Okay. Right. So this is very simply what commercial paper market is. A very simple way. What do you think about the commercial paper market in Sri Lanka? Is it active? If the loan kids issue commercial paper, they can get the benefits. But some companies actually depend on investor confidence. We know that loan deals are coming under number one or number two. I think anyway, the market capitalization. Right. So simply, if they issue the commercial paper, they can get the maximum benefit. Right? They can get the maximum benefit. Okay. In a very simple way, what is commercial paper market? Commercial paper markets. Right? Online students, are you okay with this? Yes, are you all okay with this?
Yes, sir.
Okay. Right, so when it's come to the examinations, right? When it's come to the examination, listen up. So this is the most important thing. When it's come to the examination, by mistakenly, if I have asked, briefly explain the interbank gold money market in Sri Lanka, don't draw that graph and send it to me, yeah? Okay. So once I ask a question, for an example, let's say explain interbank gold money market in Sri Lanka. Don't just only draw that graph and send it to me. And so I'm having the experience, don't just send it. Right? You may write certain things and for more interpretation, you may draw. But don't just send just only the illustration because otherwise I have to explain it by myself. Right? So if you have nicely drawn it, right, by using the ruler, nicely you have drawn. But nobody is there to interpret it to me. Arrows, only arrows and boxes. Entire insert change part of the word document is there. Right? So please don't do it. So you have to explain it, bring your practical arguments, explain, and if you wish, you can draw it if you have the time. Right? But usually don't have the time. Huh? So it depends on the question. Right? It depends on the question. For an example, let's say if I have asked the question, briefly explain the process of interbank cold money market. Illustrate to justify your answers. If the question comes, you will be getting it. Let's say if the entire marks for that particular question is 10, never would be 5. You will be getting only 1 mark for the illustration. For the explanation, you will be getting on the other. If you do both in a proper way, you will be getting the entire 5 marks. Never expect, illustrate the process of the interbank gold money market. And if that question is that, definitely you can do it. Okay? Right, so final one before the interval, because we have started around, officially we have started nearly 3 minutes past 1 o'clock, 9 o'clock. Okay, so we fine. Right, so next we'll look at the other market. Right, next we'll look at the other market. That is what? That is what? E. E. Okay, this is the other one. Treasury bill mark. Treasury bill mark. Right. So I really thought you will set it because it's T. Definitely you know that if it is bonds long term, still we are not discussing long term, then it must be T. Okay, fine. What are treasury bills? What are treasury bills? What are treasury bills? You should buy central bank. Right, okay. Yeah, simply it's a short term security. Now, you know that when it comes to the government income, right? So we have government income is there. And on the other hand, we have government, what? Okay, good. So we have government income and government expenditure. So government income consists with what? Very good. So you have tax income. On the other hand, you have non-tax income. Tax income is there. On the other hand, you have non-tax income. And if you consider about the government expenditure, you have capital expenditure. These are the major two areas, and the other one is would be recurring expenditure. Right. So this is how the government get the money, and this is how they utilize those money. Right. But there are some situations where they are lacking with certain money amount. Right. Lacking with certain money amount would be for a short term or would be for a long term. Clear? Right. Lacking with certain amount. Lacking. If the government has observed that these kind of a thing, what they do, right? If the government observe this kind of a thing, what they do, they ask Central Bank of Sri Lanka, simply the public debt department of the central bank, right? To get this amount, right? To get this amount, for an example, let's say they are lacking with 10 billion, right? The government lacking with 10 billion, right? Lacking with 10 billion. So what they could do is they can ask the central bank to get this 10 billion. Clear? To get this 10 billion. Accordingly, what central bank does on behalf of the government, right? On behalf of the government, the public debt department of the central bank issue particular funding instrument called what? Treasury bill, right? Treasury bill. Most of the time at a discounted value, right? Most of the time at a discounted value. I believe that you know how this discounted value is being calculated. Okay, so at a discounted value, right? Is this clear? Right. So at the very beginning, central bank issued treasury bills to whom? To whom? To primary dealers. We call them as primary dealers. Central bank issued treasury bills to primary dealers. Now, how many primary dealers are there? Who are the primary dealers? Simply they are the banks and or the financial companies. Right? Here in Sri Lanka, we are having how many primary dealers at the moment? Around 12 or 11 primary dealers are there in Sri Lanka. Right? So we may have heard that primary dealer units of certain banks are there. People's Bank, primary dealer unit, commercial banks, primary dealer units. So those are coming under the primary dealers. Now, when the central bank issue treasury bills to the primary dealers, how they issue this? How they issue this? It's conducted by a system and it's a auction, right? It's an auction. Auction, right? Yes, weekly would be Wednesday. They may conduct this particular thing, right? Particular thing. Then what happens? These primary dealers can bid the amounts for the treasury bills, right? These primary dealers can bid the amount for the treasury bills, right? For an example, let's say to make this clear in a simple way, in a very simple way, let's say now they need how much? Government needs how much? 10 billion, right? Government needs 10 billion. And you know that these treasury bills could either be issued for how many days? Yes, 91 days, 120 days, and 364 days. Right? Because it's money market activity, short term, less than 1 day. Right? for 91 treasury bills, 182 days treasury bills, as well as 364 days treasury bills. Now the government needs 10 billion. Government asks central bank to get this 10 billion. Central bank issue treasury bills to get this 10 billion. Now what the private leaders can do, they can bid, right? They can bid how much they are willing to pay at which interest rate, right? How much they are willing to purchase at which interest rate. For an example, let's say, right? So let's say bank AB is there, right? Bank AB is there. They are willing to purchase, let's say, 10 billion. They are willing to purchase 10 billion at an interest rate of 20%, right? At an interest rate of 20%. And let's say bank CD is there. They are willing to purchase 8 billion at the interest rate of 15%. Then bank PQ is there, right? They are willing to provide 3 billion at an interest rate of 12%, right? Then bank LM is there. They are willing to provide 12 billion, right? They are willing to provide 12 billion at an interest rate of 30%, right? So this is how each and every private dealer bid the amounts with the interest rates. How we are going to choose? Yes. So you need how much? 10 billion. How we are going to choose? Don't do more calculations, huh? I know what you are thinking, but don't go in that depth, huh? Just look at the figures and don't do more calculation by looking at the interest rates, huh? In a very simple way, because we want to identify this, because this is not a treasury class, just we want to identify this. First one, are you going to pick 10, this one, bank AB? You are going to pick this? Your funding requirement is 10 billion, right? Okay, thank you, Buddha. Your funding requirement is 10 billion, and the bank AB willing to provide you the entire 10 billion, right? Willing to provide you the entire 10 billion, but their interest rate is little bit high, right? Their interest rate is little bit high. So I told you not to do more calculation. Just only look at the things. Huh? Then what are you going to do with bank CD? They are willing to provide 8 billion at an interest rate of 15%. Except PQ 3 billion at interest rate of 12%. Accept?
Yes.
Okay, good. Bank LM 12 billion at an interest rate of 13%. Accept?
The remaining 7 billion we can accept from the LA.
Yes, what you are going to do?
The remaining 7 billion we can accept from LM, right?
Yes. Now, if you consider about the bank AB, they are willing to provide 10 billion. That's why that is your entire funding requirement, but the interest rate is high, right? Their interest rate is high. So accordingly, for the moment, let's forget. Then bank CD, they are willing to provide 8 billion and their interest rate is 15%. Somewhat okay, we can consider. And bank PQ, they are willing to provide 3 billion and the interest rate is 12%. Somewhat okay, we can accept 2 billion out of this, right? Because the accepted amount is there. Then bank LM, they are willing to provide 12 billion at an interest rate of 13%. What you should do could be different answers. Right? So anyway, we'll forget about this because of the higher interest rate. And bank CD, it's 8 billion for 15%. Bank PQ, it's 3 billion for 12%. Right? So we can accept 8 billion from this person and only 2 billion from this person. Would be, it's understandable, right? And LM also, we can accept 10 billion at an interest rate of 13%. Accordingly, more suited to go with whom? These two or this one? Huh? Final one, right? Just an example, huh? Just an example, there could be many primary dealers, right? So simply, we are not getting 12 billion, right? So if you entirely get 12 billion, it could be sometimes, because usually they accept the exact amount of the low amount, right? Most of the time. So we can go with 10 billion with 13%. Understood? 10 billion with 13%. Up to some extent, it's okay. We can accept 10 billion at an interest rate of 13% because it is very much cheaper than if you combine these two. You're accepting 8 and paying 15. You're accepting 2 and paying 12. Right? So ultimately, this is much more okay with your clear. Right. So this is how it happens. It's entirely depend on the system. Right. So after that, they can determine the yield rates, the interest rates for 91 treasury bills, 182 days treasury bills, as well as 364 days treasury bills. Clear? So this entire part, right? So this entire part, we call it as primary market for treasury bills. So this entire part, we call it as primary market for treasury bills. Right? Primary market for treasury bills. Right? Primary markets for treasury bills. Is that clear, online students?
Yes, sir.
Primary markets for treasury bills. Right? So then what happens? Right? Then what happens? Now let's assume that bank LM. Okay? Let's assume we have selected this bank LM to issue our treasury bills. Now what happens? This bank LM comes to their bank with the treasury bills. Clear? They have purchased the treasury bills in the primary market and they come to their bank and now they have T-bills with them. They have T-bills with them. Now what they could do, they can issue these T-bills again. To whom? To general public. They can issue these T-bills to general public. They can issue these T-bills to general public. And we call that market as secondary market. Right? Secondary market for treasury bills. Secondary market for treasury bills. And even though the bank is getting a higher interest amount here in the primary market, will you be able to get the same amount? No, very simple, because that is their income and paying interest to the general public will be their expenditure. So they are trying to minimize this, right? They are trying to minimize this. So if I'm not mistaken, the minimum bid is 5 million and the multiplications could be 1 million. And you can also be a primary dealer if you have that kind of a money. You can merely simply go to a bank, meet the primary dealer limit and tell that you need to become a primary dealer. They could provide the facility, but you need to have, if I'm not mistaken, around 5 million. Right, around 5 million. Okay, so this is primary market and this is secondary market. For the treasury bills, you are issuing the treasury bills to general public, not the exact interest rate at a lower interest rate. Okay, clear? Right, online students, are you all okay? Are you all okay, fine?
Hi, sir.
Right.
Sir,
Okay,
if you
fine.
can explain a little bit more about interbank call market.
Interbank whole money
Hello?
market. Yes, Sudha, I can hear you.
Yes, interbank call money market. If you can little bit clarify more.
Right, sure. Now, interbank whole money market is simply what the banks can do the transactions between themselves for immediate liquidity requirements. If a particular bank is facing a particular liquidity requirements, then they can request some funds from another commercial bank. Right, so these transactions are happening within the day. Usually, that is why we call this as overnight market, right? Overnight market. So then the other bank, what they could do, they can provide the required amount to this requested bank. Then, as you know that usually if you obtain a loan, you have to pay the interest to the capital. The paying capital is not an issue, but here the interest is the matter. Now, in that particular case, interest rate for the interest determination, the central bank has provided a particular, guideline. We call it as SRC, right? Standing rate corridor. We call it as interest rate corridor. So simply it says if you do a interbank all money market transaction, the interest rate that you have to charge must be within the particular boundary. Upper limit as well as the lower limit is there. Accordingly, that bank can charge a rate based on those upper and the lower limit. So why the central bank has done such things with the purpose of minimizing the fluctuations in the short term interest rates, because there's an upper limit, simply the maximum interest rate that a bank could charge as well as the minimum interest rate that a bank would charge. Accordingly, the interest rates is being fluctuated among these two rates, not go beyond that as well as not go below that. Okay, so if that the entire banking system does not have that one, they can go for a central bank. Is that okay, Muda?
Yes, sir, I got it.
Okay, fine, good.
Thanks.
Right, so you can have your break.
Yeah, excuse me, sir. Yeah, excuse me, sir.
Yes, yes.
So if you don't mind, sir, that can you explain to us that how that fraud happened related to that perpetual treasuries? I know it's not related to our subject, but we cannot understand how it happened actually. Yeah.
Yes, actually now if you look at particularly this last example, simply if you look at this one, you can get that idea only this part, huh?
Mm.
This part actually, since it's under the discussions, I am not in a position to explain it, the bond scam situation.
Okay, okay,
Right.
I say, I understand.
Still, we don't know it's a scam or not. Anyway, there's issue. So what we would say, right? So anyway, there's issue. We cannot directly say it is like this, it is like this. It should be an issue. Still, it has not been justified. Right? So actually, I'm sorry, Muna. It was
Yeah,
not
yeah,
like
sure,
this.
no problem, no problem, sir.
Okay, right, okay, nice. Right, fine, so we can start. The session again, okay. Right, your interval and a cup of tea. Right, okay, so now we have learned about money markets, right? So simply interbank whole money market, interbank, interbank whole money market. We have learned about right, so we have learned about interbank whole money market, the commercial paper market, treasury bill market. The investments, are you all available at the moment? Are you all available at the moment?
Yes, sir.
Okay, fine, thanks. So then there's only one market that we have learned, that is interbank foreign exchange market. Actually, it's nothing to learn about interbank foreign exchange market. It's simply what happens there. So we are dealing, banks are dealing with the foreign currencies, right? So if they need, so simply if you need a foreign currency, what you have to do? You need dollars. What you have to do? You need $100. What you have to do? You have to pay, or you have to provide LKR, which is equivalent to 100 USD to bank, and you can get the foreign exchange. And if you get dollars, you can convert into LKR as well. So simply banks are dealing with these foreign exchanges, and that is what here we have to consider about interbank foreign exchange market. Right. So other than that, so this is one of the most important thing that you have to learn, that is treasury bill market. Right. So simply interbank whole money market 2K, interbank foreign exchange market, treasury bill market, and this is the other one. The other one is commercial paper market. Right? Fully confident? You can answer for any question. Right? Okay. So now we are moving to discuss about capital markets. Right? We are moving to discuss about right, capital markets. So introduction to capital markets. Right, so we are okay with money market, right? So you know what financial system, that's how we start our lesson. For you to learn what financial markets are, you need to have some sort of an idea about financial system, right? So we got to know what financial system is, and the financial markets are one of the component in the financial system. So you got to know what financial markets are. Then what are the two categories, money market and capital markets? And we have now completed the discussion about the sub-markets coming under money markets. So now let us discuss about capital markets. So you know what are capital markets. If you are going for a longer term investment, lately it is considered as capital market activity or an investment. Right. So here it says the firms that issue capital market securities and investors who buy them have different motives than those who operate in the money markets. Now, this is what we discussed at the very beginning. If you have invested in money markets, you are looking for a quick return. But if you have invested in capital markets, you have to take time, a little bit patient. You are more analytical, right? Those are the motives. So firms and individuals use money markets primarily to warehouse funds for a shorter period, until more important need or more productive use for the fund arrives. Sometimes you may have 10 lakhs with you. At the moment, you don't have any activity to do it, but after 1 year, you need what to do. You go and put it into 1 year. Right? Then, by contrast, firms and individuals use capital markets for long-term investments. Right? So these are the functions of a capital market. Right, some of the functions of the capital market: provide capital to those who issue shares. If companies issue debentures or shares, they are issuing with the purpose of getting funds. Once they issue it, they can get the funds. And the distribution of securities to the investors. So once we purchase those shares, so we are in the share register of that company, and it's a contract between the company and us. Then formation of a secondary market to trade securities. Right? So it provides some sort of another platform to trade the securities among investors. Right? Among investors, that is the point that you need to take here. Now, when we are discussing about the money market, actually the money markets are, they are in the country to facilitate the liquidity. To maintain the liquidity in an economy, you need to maintain the liquidity. So if you can say about your house, you need to maintain the liquidity in the economy, right? So as well as it is down to the economy as well, they want to maintain the liquidity of the economy. To maintain the liquidity of the economy, money market facilitate for them. Right? But capital market is for a different perception. Right? So simply it provides a platform for the investors to trade among themselves. You can sell your shares to another, you can purchase your shares likewise. Right? So those are some of the functions coming under the capital market. Right. So capital market participants, we have stock exchange, listed companies. What do you mean by listed companies? Simply companies which are listed in the Colombo Stock Exchange. How many companies are there? How many companies are there? 200, 200, 200 and 200 and around 294 to 97. Right? Around 294 to 97 companies are there listed in the Colombo stock market under how many sectors? Under how many sectors? We have telecommunication, diversified holdings, retail, service, banking and finance. Likewise, under how many sectors? Nearly 20 sectors. Right, so we call it as early days, we call it as just sectors, but now we call it as to under the global industrial classification standards, GI, right? The global industrial classification standards, GICS. We have 20 sectors. Under 20 sectors, we have nearly 294, 297 companies. So stockbrokers. Who are stockbrokers? Who are stockbrokers? Yes. Yes, good. So they provide facilities for you to invest in stock market. So definitely you need to get registered with a stockbroker to invest in stock market. Investment bank or investment bankers. What are investment banks? Yes. Investment banks. Investment banks. Any idea? Again, they provide the facilities for the company. The time of issuance of equity and other financial related matters. Then primary dealers, you know who are primary dealers. Then we learned also regulators are there and institutional investors and individual investors. So who are institutional investors? Who are individual investors? If you go and purchase shares of a particular company, you are an investor but individual. If a company go and invest in another company, it's an institutional investment. One company is doing an investment in another company. Institutional investment. Okay. Right. So then we are going to learn about capital markets now. If you say capital markets, what comes to your mind at first? Say capital market, what comes to your mind at first? Stock market. It's just there. Right. So once you say capital markets, most of the time, yes, we always believe that stock market is there. Right. So share market. Right. So now here you could say capital markets, stock market or share market. So here you could see nearly we have 289 companies representing 19. No, I'm sorry, it's 19, right? 19 global industrial classification standard as at 31st March 2023. Right? We have 289, sometimes 294, 297 companies in the stock market in Sri Lanka. It varies because of Sometimes they may come in, we may not submitting reports accordingly, certain things could happen. So here it says stock market is one of the most important constituent of the capital market. That is why when someone says capital market, we always think it's only the stock market because it provides that much of a, the dominancy to the capital market. Stock exchange is an organized market for buying and selling securities. And it's convenient place where trading in securities is conducted in a systematic manner. So sometimes nowadays we can do manual as well as online. Right, so it's there in the World Trade Center building. Right? Yes, yeah, several branches are there, simple idea about the Colombo stock market, right? So these are some of the stock exchanges around the world. Now, what is CSE? Colombo Stock Exchange, right? Colombo Stock Exchange. What is CDS? Very good. Central Deposit System. Who are these? Bear, bull. Why those two animals are there? Can't be included a rabbit there. Why those two animals are there? Yes. Yeah. Yes. Why? Now let's say bull denotes what? Bull. So why bull is there? Why bear is there? Why bear is there? So if you compare the behavior of these two animals, usually norm says bear is a very lazy animal, right? Not much active, something like that. So accordingly, if the stock market is not performing that much well, we call it as a bear market, bearish nature. And so the market movements are there, but if you draw a trend line, it's not that much upward, it's downward, right? Market fluctuations are there, spikes are there, but if you draw a trend line, it's declining trend. And bull, compared to bear, usually it says that bull is an active animal compared with bear. So accordingly, if your market is performing well, so we call it as bullish nature, bull market. Right? Again, the spikes are there. The market is having an upward trend. We call it as bull market. Okay. Right. Yeah. So how the stock price is being determined? This is how the stock price is being determined. I'm not asking the CSC, which is specified in the London stock market share price. Let's say issue price. How it will be determined? Price. Now, let's say companies there. That companies need to list in the Colombo Stock Exchange, and there are many ways, and they are going to do a issue shares to general public. Right? So for an example, let's say if they need 10 billion, right? And they are going to issue 1 billion, what is the issue price? 10. So how they determine that 10? Yes, based on the many components, including as you previously mentioned, asset base, right? And also you need to get the support from investment banks as well. Some of the time, that's why I told you investment bank provides the facilities for the companies, not only the share issuers, other fund managers as well. So most of the time, you are getting support from the investment bank to determine this share, the issue price of the share, right? Issue price of the share. Then what happens? Right? Okay, fine. So here you could see there's a company called, let's assume, right? PQR company is there. Right? So they will determine the company's issue price of the share and the number of shares. So here you have something called flotation cost as well. Here we are not going to discuss those things. Flotation cost, the cost related with the issuance of shares. You will have documentary cost, legal charges, and many things. So simply when the company is issuing shares, they are determining the issue price and the number of shares. Then they issue these shares to general public for the first time, right? So we call it as what? Yes, we call it as IPO. IPO stands for initial public offer, right? IPO stands for initial public offer, right? So let's say number of shares, let's say 1 million and 10, they are going to get 10 million worth of shares, right? So this is the first time that a company is going to issue their shares to the general public, and the process is known as public offer or initial public offering. Initial public offering. So you might have noted that in most of the cases, when your issue price is 10, example, right? Your issue price is 10 rupees. When you get listed in the stock market, right? For upcoming weeks, nearly for 1 week or 2 weeks, your share price increases, right? Share prices increases. But after some times, what will happen? Share price starts to decrease. So that's the common issue. We call it as underperformings of the IPO markets. It's a particular research-based area. That's only for your knowledge, right? Fine. So this is initial public offerings, right? Initial public offerings. Now what happens? General public purchase the shares from the company, right? General public purchase the shares from the company. Then what happened? They come up with those shares, right? They come up with those shares, and they can buy and sell those shares with other investors, right? They can buy and sell those shares with other investors. Here what happens? Company is the issuers. They have issued the shares to the general public, and the process is known as IPO, and we call this as primary market, right? We call this as primary market. Clear? Then in the primary market, shareholders purchase the shares, then they come. Then what they do, they sell or buy those shares among other investors. Clear? This part we know as secondary market. Secondary market. And stock market provide the platform for this secondary market. Right? So Colombo Stock Exchange, not only Colombo Stock Exchange, any stock exchange provides the platform for this secondary market activities. Clear? Secondary market activities. Now this is what happens. If you do buying and trading of the shares of the companies in the stock market, will it be affected to the company's traded capital? Will it be affected to the company's traded capital? No. It's simply a buying and selling of shares between investors. But here, it may have an impact. Understood? It may have an impact. Right? So this is a very simple way. What is primary market and secondary market? And I told you that we are discussing this thing at the very beginning. When we were discussing about the capitalization of the financial market, I told you that I'm not discussing this one here. Later on, we are going to discuss. If not, we are going to discuss this. Right? Primary market and the secondary market. Right. Here you will see in your primary market. Here it says primary market is where securities are created. Right? Securities are created. Here you could see the companies issuing securities for the first time. So at the time these shares are being created. It's in the market that firms float new stock of shares and bonds to the public offer for the first time, public for the first time. So initial public offering or IPO is an example for a primary market. So IPO, that is the first time that the company issues shares to general public, and we call it as initial public offering. Right? So here it says an IPO occurs when a private company issues stocks to the public for the first time. Why? They want to become public. Right? Private company wants to become public. The company who brings the IPO is known as the issuer, and the process regarded as public issue or IPO. The process includes many investment banks and underwriters to which the shares, debentures, and bonds can directly be sold to the investor. Sometimes underwriters are also there because they prescribe. If the general public do not subscribe to certain number of shares, we are in the position to pay some percentage out of those underwriting. Right? Underwriting. That is primary market. Primary market. Very simple. Very simple. Then the other one is secondary market. Simply market activities in the Colombo Stock Exchange. So secondary market is commonly referred to as stock market, right? Colombo Stock Exchange. The defining characteristics of the secondary market is that investors trade among themselves. Here you could see investors trade among themselves. Among themselves. In this market, existing shares, debentures, bonds, options, commercial papers, treasury bills. Yeah, those are the things. Corporates are traded among investors. The secondary market can either be an auction market where the trading of securities is done through stock exchange, or dealer market, corporate known as over-the-counter market, where the trading is done without using the platform of stock exchange. Right? Here we don't have some, we have the stock exchange, right? We have the stock exchange and we can do the transaction via online as well as manually. Right? Now, what do you think is the general question that I'm asking? I believe that you have some sort of fair understanding of these things, huh? That's why I'm saying these things. But if you read advanced way, now we know that. I believe that you all have gone to stock market website, XCSC website, and you have a particular place for equity trade summary and debt trade summary. Right? Now, what do you think? Are we having an active debt market or equity market in Sri Lanka? Yes, my question is, are we having active equity market or debt market?
Equity market?
Equity market. As I remember, active, we are having active equity market. But if you look at the debt market instruments, those are not much active. What could be one of the reasons for that? Any idea? What could be the reason? If the answer is yes. We are having active equity market, we are having the debt market, but it is not that much active. I think I have asked the same question in the exam.
So because of liquidity?
Could you please explain Yula?
So because of liquidity, I mean there are so many transactions in the equity market. But in the debt market, we don't have that much of instrument to trade.
Yes, the reason for that is now very good. Now most of the time, what happens is, if you this is one of the reasons. If you purchase shares, do you have a maturity period? You don't have, right? You don't have a maturity period. If you feel like you can sell or not. Is the company guaranteed that you are getting the dividend? No. Accordingly, you need to get the return either by selling the share, by making it into capital gains, right? Making it into capital gains. But when it comes to the debt securities, are they having the maturity period? They are having a maturity period. Are they getting a fixed amount of interest or whatever? Yes. So if you are having a debt instrument, are you going to sell the debt instrument in the market? Mostly no, because no need to worry no. Because if you are a debenture holder of a company, you know that your debenture will be mature maybe in 3 years or maybe in 5 years. Until such time, you are getting what? Interest. One annual interest you are getting. You listen. So no need to sell your debenture because you can just say you are getting interest. But shareholders what happens? The company has not guaranteed that they are getting the dividend. And also there is no maturity period, but they have done investment to get a return. So how they could get a return by selling their shares? So that is why, as we mentioned, we are having that much of a liquidity in the stock market. Because always there are trades, but debt market, just refresh it and see. Right here, huh? Clear? So if I ask the same question in the paper, can you answer? Can you answer? Who says it that you the question? Right, okay, fine. Right, okay, fine. Put up anything, yeah, put up, just read the thing. Yes. Right. Okay, so let's go in a discussion with other students regarding certain things. Right, good. Right, okay, fine. So now, you know about some basic things about stock market, which provides the facilities for you to buy and trade, shares. Right? Primary market is there, secondary market is also there. Then, methods of listing, right? Methods of listing. How you can get listed in the stock market. One method is IPO. We call it as offer for subscription, right? So that is what we discussed. the company is issuing shares to the general public at the very first time. By doing so, they can get listed. That come to stock exchange. And the other one is what? Offer for sale. What is the offer for sale? Any idea? Offer for sale means what? Just take it, just take it. Offer for sale. Yes. Yes, what is supposed to say? I said. Yes, supposed to say means what? Yes, any idea? Supposed to say you can just search that. Supposed to say. Right, yes. What is supposed to say? Yes, online students, what do you think? What is supposed to say?
The secondary market sale.
Yes, yes, could you please explain?
So if someone wants to reduce that, how much shares he's holding, and he can sell it at the demanded price.
Sorry.
Say someone is holding number of shares, say 100,000, and he wants to reduce it to 50,000. For the demanded price, he can sell it, right?
Yes, so because we cannot give you properly.
Yeah, now it's fine.
For the moment, it's okay.
Yeah. So suppose someone is holding 100,000 shares and he wants to reduce his number of shares to say to 50,000. So at market price, then he can sell his shares.
At market price.
Yeah, then he can sell his shares.
Is that? Is that what you said? So you are saying, let's say you have 100,000 of shares.
Mhm.
Then you believe you can sell some of your shares at the market price. Accordingly, you do that sales.
Yeah, then so based on then you can reduce that shares you are holding.
No, that is not the purpose sale, but anyway, very good answer. Yes. What is that? Yes, and you can do that. Purpose sale. Yeah. Yes. So we have the investors here, right? So accordingly, what you have to do there, right? Okay, so there's a small homework for you all, right? There's a small homework for you all. One is you need to simply identify what is offer for sale with an example. Should I write this down? Right, online students? Yeah. Everyone, okay. Right, first one, what is offer for sale? Right, what is offer for sale? Right, then the second one is you need to find out the steps that you want to follow if you are doing the investment in Colombo Stock Exchange by manually as well as online. Very simple. Steps, what you have to do first. Right? If it is a manual trading, what you have to do. It is an annual grading, what you have to do. Okay, what is the offer for sale? With an example, then the steps that you need to follow to purchase the shares. The stock market by manually as well as electrically or electronically online method. So I will create the link, you can upload it. From secretary. But don't copy paste, huh? Don't copy paste, because you need to have the idea what you have written there. Because sometimes I know that, when the students are doing such things, and they have a particular text code, read for colon, SPDP, www, slash, they don't know even the link is also. Simply what they do, very companies invest only, invest only, to the movie, and at the end we have that read more, for read more, please visit this website. It's also. It's so how nice. It's so good. Right. Okay, so please don't do such things. Please don't do such things. Right, okay. So now here you could see several institutions. Listen up. Several institutions and systems are involved in facilitating the operations of stock market, mainly companies act is their Securities and Exchange Commission. Right? Stock market is which type of a company? Stock market is which type of a company? Yes. Company, limited by. And so who are the owners? The control is being done by. Yes. Securities and Exchange Commission. Right, so who are the parties in the stock market? I mean, the monetary part. So we have stock brokers and we have several directors appointed by several institutions. Right, so we need, that is the operating mechanism that we need to know. Right. The company limited by guarantee, and you need to know who are the members of the CSC, and CDS means what? Central Deposit System. What is that? It registered what? Registered number. If you have done a deposit in a bank, it's a bank account, right? So if you have done an investment, you have not a bank account, but a CDS account. Right? The account is the central depository system. Right? Both the registered accounts are there. So your cash balance all are there. Right? CDS, central depository system. And what are the taxes available for here? We have what are the not the taxes, what are the cost involved? If you purchase or sell the shares, what are the cost involved? You have to pay some amount to brokerage fees there. Okay, fine. Yes, BSC fees, Colombo stock market fees, Securities and Exchange Commission fees, brokerage fees, then share transaction, then is there. Right, so there are certain thresholds. You go beyond that threshold, certain percentages are applicable. But if you below those thresholds, another percentages are available. So all these details are in the stock market. If I'm not mistaken, if you click that, what is that? Investors under transaction cost, you can see all these details. Right, so market intermediaries, exchanges, listing rules, brokerage and dealers, trading platforms, disclosure, trade information. Right, so you know that it is come to the Colombo Stock Exchange. Each and every company must want to inform every detail. Right, regarding the operating mechanism of the Colombo Stock Exchange, even the changes in the directors, dividend payments, right issues, changes of the chairman, everything you can see under the announcements. Right, under the announcements, you can see such details. Because they have to report it within, if I'm not mistaken, within 4 days of such kind of a replacement or incidents. Right, okay, so then, fine, so for subscription and the focus is for your homework, and these are some of the things that you have to learn. Then, now, we discuss about how the company can get listed in the stock market and the stock market by going for IPO or purpose area. Now, there are certain other requirements that we need to fulfill. What are those? So here, some of the things are there. Now, there's a particular, I think you have know these things, listing rules. Have you heard? This is in your LMS also. I have uploaded it, if I'm not mistaken, listing rules is there because there are certain qualitative and quantitative requirements that a company must want to adhere before they get listed status in the terms of exchange. Why? Because simply by issuing shares means general public is providing a loan for the company. Therefore, the company must be handle their finance matters in a very disciplinary way. Right? Very disciplinary. Otherwise, what will happen? You put your hard-earned money in the company and the company will collapse. What will happen? So if there is no any statement saying that you are going to get the priority at the time of liquidation or bankruptcy, you are going to lose your money. So accordingly, the company needs to have a better financial discipline, right? At the time of getting the listed status as well as continuing their operation. That is why the CSD is asking the companies to submit quarterly reports. So that submit quarterly reports because they want to assure the performance of the company, whether they are doing well or not. Right, so it says several quantitative and qualitative characteristics must possess to be listed on the exchange, right? Qualitative or quantitative. So it could be varied by exchange, but here we already have the number stock exchange. Only one exchange is there. Number of shareholders, number of public shares, market value of the public shares, pre-tax income. So usually, when it comes to the stock market, we have how many boards we have? We have two boards, main board, and the other one is divisory board. Both the big performing companies are listed under main board. So for you to get listed in the main board, then you need to maintain the profit before tax for how many years? Nearly for 3 years. Nearly for 3 years. You need to maintain profit before tax. Before, for example, let's say you are going to get listed in the Colombo Stock Exchange in 2023. Before that, 3 years, you need to show your profit before tax. Profit before tax must be there and also tax. And the cash flow must be there. Then, for other things, at least, if I'm not mistaken, clearly 25 to 30 shares must be owned by the general public. Right? Between 25 to 30 shares, by time of mistaken, must be owned by the general public. That is to distribute the ownership. Right? Okay. And there are some other fundamentals as well. We are saying that at least there must be 1,000 shareholders will purchase and at least this much of shares, something like so. Those are the quantitative characteristics that that we are looking at when we are getting a company to the stock market to be listed. Right? To be listed. Number of shareholders and what about the public ownership of the company? What about the income, profits part? Right, so those are the other things, number of shareholders, number of public shares, market value, and pre-tax income. Right, so simply, you need to maintain a very good financial discipline before you get listed in the Colombo Stock Exchange. And also, you need to continue something like you're having a very good qualification before you are going to work at the interview. Based on your qualification, you will be selected. But after that, you are not performing well. Something like coding day. Before you are getting the listed status, you need to have very good financial discipline as well as after you get the listed status, you need to continue your financial discipline. Certain because you are handling public funds. Okay. Right. For the equivalent balance, yes, just read these things. Just make a note. Okay. Fine. Okay. Listen now. Right. Listen. So that's the end of discussion about the stock market. Listen now thereafter we have discussed about debt security corporate debenture market, treasury bond market, unit trust markets, and the types of orders. After that, it's over. Right? After that, it's over. And additionally, I'm doing one particular thing that's not actually in your syllabus, that is capital market efficiency. Right? Capital market efficiency parts, it's not in there, but I feel like better to teach that part as well, because as a finance student, you need to have some sort of an understanding about capital market efficiency. Right? Sometimes you might have heard that weak form, strong form, and semi-strong form market efficiencies. In a very simple way, let us look at what are those capital market efficiencies. Right, so for the moment, it's over. It's over. Do you believe? Please, you have to believe that. Okay, so next week, because I believe that we have discussed many things, right? Next week, what happens is now you have you have one homework, that is what simple homework. You need to find out what is proper for sale, then you need to identify and write the steps of purchasing shares either by manually or electronically online in the Colombo stock market. Right. So today what we have discussed, we have started discussing about, right? Listen, now, final part. Summary, very much important. Right, because we are starting the lesson by providing an executive summary or abstract, and we have to complete the lesson by providing a conclusion. Right, so that is how it must be according to my perspective, because you need to know the knowledge, you need to get the knowledge, idea, theory, and fine. So today we have started discussing about financial markets. Clearly check whether you are all okay with this up to certain level. I'm not expecting 100% during the class, but up to a fair level, right? So we started discussing about financial markets, and before that we learned what financial system is, right? So India, I told you that if you consider about market, if you consider about the economy, we have households, firms, government sector, and the foreign sector. What all these people do, they make decisions and they want to implement those decisions as well. So when they are going to implement those decisions, we took certain examples, several examples, and we understood it. When they are going to make their decisions as well as to implement their decision, they need the support from financial institutions, financial markets, other regulatory bodies, finance companies, financial markets, and also sometimes from the central bank, right? Central bank. So the connection of all these elements, we call it as a financial system. In this financial system, there's a one component called financial market. That is your topic. For you to know what you are going to do, you need to know what financial system is. Then we discuss that, we discuss this financial system, what it does. It creates employment opportunities, bring more income to the company and increase the company's employees' income. Then they do more savings. Those savings can be converted into investments. Again, it's a cycle, right? It's a cycle. Thereafter, we started discussing about financial markets. I told you that financial markets are a particular platform which provides the transactions of funds between investors, surplus units as well as deficit units, right? If you want to get money by selling your shares, simply you can go to the market and sell your shares and convert it to money, right? And if you want to deposit, you can go to a bank and you can do it. So all these are financial markets activities, right? Then these financial markets in a very simple way can be divided into two, money market and the capital market. So money market is for short-term purposes and the capital market is for long-term purposes. And we got to know that the instruments, the financial instruments that are being traded in the financial markets are known as securities. Accordingly, financial markets are known as security markets, right? Then we understood the categorization of the financial markets. I have asked you to only consider the first three, right? Based on the generation, it's primary and secondary. Then based on the ownership, it could be equity or either it could be debt. Then based on the time to maturity or the term to maturity, money market and capital market. Right. So thereafter, we discuss about who are the participants of these financial markets, what are the instruments that are being traded in the financial markets, likewise. Then we wanted to narrow down, right? So first we have discussed about money markets. In there, it's a short-term one. Why money markets are there? It's facilitate the liquidity of the economy. That is why we need a money market. If you feel like suddenly to go and sell and get the money, that's the liquidity. So it facilitates by the money market to the economy. So we are having we discussed four stock markets coming under the money market: interbank whole money market, interbank foreign exchange market, treasury bill market, as well as commercial paper market. Right. Then we started discussing about capital market. It's for a longer period of time. Right. So people have more different ideas and the perception in the capital market than those who invested in money markets, because you are doing more analytical, you are using more analytical tools and you are doing more analysis before you are going to invest in the capital market for a long-term purpose, for a long-term purpose. Then we got to know about functions of the capital market, participants of the capital market, right? So then we discuss about what is stock market. You know many things. We just had a discussion, right? What is primary market? What is secondary market? What are the methods of listing, right? What are the requirements that has to be made from the company's perspective before they get listed in the Colombo stock market? Those are the things which we have discussed up to now. Okay, so next week we are completing the remaining part and starting the next lesson. And please upload your homework to LMS. I will make the link available. Okay, fine. Right, yes, online students, are you all okay with the things that we have discussed for today? Are you all okay with the things that we have discussed?
Hi, sir. I have one small question to ask
Yeah,
you.
yeah.
So in 2021, Jet Holding,
Yes.
they issued an IPO. So can we consider this as an offer for sale?
Oh, sorry. A moment. Yes. Hello.
Hello? Hello, sir.
Yeah. Yeah.
So can you hear me?
Yes. Yes.
Hello? So can you hear me?
Yeah, at the moment I'm okay. Yeah.
Sir, my question is, in a simple way, like IPO, can we consider
Yeah.
an offer for sale?
Can be considered as an offer for sale.
Yes. Because this is, for
IPO can
example,
be- yeah.
like the company is planning to get money. Investors are invited to the people. So
Yes.
it will be an offer for sale or it will be an offer for subscription?
Investors are just a moment, still I'm getting the noise here. Simply you are saying, yeah, could you please repeat it again? Investors are.
Investors are willing to get money, funds from the public.
Mhm.
So can we consider as an offer for sale?
Investors are willing to get the money. That is what you are saying, right?
Investors means like company owners
Yes, owners, right?
are willing to get funds from the public.
Okay.
So they are planning to make one IPO recently, like in 2021, Jet Holding.
Yes.
They issued one IPO. Can we
Yeah.
consider this an offer for sale?
Can we consider this an offer for sale? Now here, it is an IPO, right? Because they are asking the general public to come and subscribe for the shares of their company.
Mm-hmm.
It's an IPO.
Yeah, it's an IPO.